We all know that healthcare and medical treatments are super expensive here in the United States, on top of paying for different taxes and obligations we have. And from personal experience, you might have encountered drugs that should have costed $10, $12, $15 that are marketed at $100 to $200, $300. And I know a lot of you guys may have different opinions and thoughts about whether government should offer healthcare or private companies should offer healthcare. And I too, of course, have opinion about why the insurance system is really broken in this country. But here in this video, I'm gonna expose how the wealthy pay for their medical expenses tax-free, allowing them to pay less taxes and also bringing down their cost of insurance when it comes to their healthcare. I'm gonna show you how that works in this video. What's going on, guys? Sam Kwok here, one half of the Kwok Brothers. And if you're new to our channel, we're all about how to make more money, how to keep more of it, and how to increase your wealth through disruptive financial strategies that you've never heard about and not taught in schools. And all through my young age and even through my adulthood and now, I've always been intrigued as to how do the wealthy make their money, how do they keep it, and how do they maintain this growth when it comes to their wealth. And I've been studying very carefully for the last 10 years and even apply to my own businesses, to where my brother and I own and operate multiple seven-figure companies. And I'm gonna show you some of the secrets I've learned along the way. Now, the topic of this video is how do the wealthy pay for their medical expenses tax-free? I'm gonna show that to you right now through my whiteboard. Okay, so I got the whiteboard pulled up just as always to visually showcase what the wealthy does to pay for their medical expenses tax-free. Now, one of the most underutilized financial tool and account that most people aren't even aware about, but I see the wealthy use this time and time again, and it's called HSA, which stands for Health Savings Account. And what an HSA is, it's a tax-deferred account, just like an IRA or 401k, that you can use to invest in things like stocks, bonds, mutual funds, ETFs, your favorite crypto, and so on. But my favorite version of an HSA is something called a self-directed HSA. So SDHSA, self-directed HSA. Now, in order to open up an HSA, you must have something called a high deductible health plan. Now, a high deductible health plan is a type of health insurance you get, and the difference between a typical health insurance versus a high deductible health plan is that with a high deductible health plan, you're expected to contribute more towards your medical expenses out of pocket before the insurance covers for some of those medical expenses. But this is where the HSA comes in, where the HSA ultimately pays for the medical expenses tax-free, and after a certain limit of the deductible, your health insurance then will pay for the rest. So then what is the deductible limit, and how much money do you have to contribute towards paying for your own medical expenses before the health insurance kicks in to pay for the rest? Well, according to the IRS, if you are a self-payer, meaning you're the only person being insured, that deductible limit has to be no less than $1,600 for the annual deductible. If you have a family coverage, the annual deductible limit should not be less than $3,200. So your deductible has to be more than $3,200 if you're in a family coverage. If you're solo, if you're alone, then it has to be no less than $1,600. So what that means from a practical standpoint, let's say you are a self-payer and your deductible is at $1,600. In an event, you go to a hospital and you get a hospital bill for, let's say, $3,000, you are responsible for the first $1,600, which would then come out of your HSA. And once you pay for the medical expenses out of the HSA, which is tax-free, the remaining $1,400 would be covered by the health insurance. So because the deductible is high, and the higher the deductible, your premium cost, the actual cost of insurance, is actually less because you have more skin in the game, and the health insurance company has less skin in the game, and they don't have to pay out until you've put in basically $1,600 in this scenario. So that's the contextual reference you need to have in understanding. In order to have an HSA, you need to have a high deductible health plan in order for you to qualify for the HSA. Now, I want to shift the attention to what you can do with the HSA, because this is really powerful stuff if you know how to use this correctly. So like I mentioned briefly earlier, with your HSA, you can pretty much invest in whatever the IRS allows. So you can invest in stocks, just like any brokerage account, stocks, mutual funds, ETFs. You can invest in bonds, treasuries, even CDs if you like. So these are pretty typical investments that you can get into, even with your 401k and IRA. And of course, that comes with tax-deferred growth, which is always a great thing. But the difference between your HSA and your 401k IRA is that with the HSA, you can use it to cover for medical expenses, prescription, out-of-pocket medical costs, certain over-the-counter products. I mean, the list can go on and on when it comes to medical treatments. The list can go on and on when it comes to application for healthcare and medical expenses. So you can use your HSA account to fund your prescriptions. Here we go, I'm just gonna abbreviate things. Over-the-counter drugs, certain medical devices. This also includes any psychiatric treatments. If you need to see a counselor or you need to see a therapist, that also is covered. Mental health is also a big thing that can be covered through your HSA. So there's a myriad of things that can be covered through your HSA. Again, the beautiful thing with all of this is that your investment growth, whether it's in bonds, stocks, mutual funds, all the growth can now fund your medical expenses tax-free. So for at least this year in 2024, you as an individual can contribute into your HSA tax-free and deduct that from your taxable income around $4,150. And as a family, you can contribute up to $8,300 tax-free. So if you're anticipating to spend several $1,000s a year on medical expenses, medical devices, over-the-counter products, prescriptions, mental health care, all of that, I mean, it's pretty much no-brainer to go and contribute into your HSA, right? Whether it's $4,150 as a single payer or $8,300 as a family, it's no-brainer because you can have tax-free growth in your investments and have those investments fund your medical expenses, which all of us at one point in our life, we're gonna have to pay for medical expenses anyways. So this is a phenomenal financial tool that I think everyone should at least be aware of to be able to use an HSA. And of course, you have to have a high deductible health plan. I mean, this is phenomenal to be able to keep more money that you're earning, pay less taxes. If you're a W-2 employee, obviously you'll get a bigger refund every year if you make more contributions to your HSA 401k IRA. Same thing as a business owner or a 1099 contractor, you get a massive tax break just by contributing to these amazing tools like 401k, IRA, but HSA, my goodness, what an underutilized tool that I think a lot of people miss out, especially in America where healthcare expenses are through the roof. But because this is me and this is the Quacklers channel, I'm gonna give you the next level up game in terms of what you can do with your HSA. Now, having an HSA itself is a great move, and of course, talk to your tax professionals about it, but even better than just a good old regular HSA is something I like to call a self-directed HSA. So a self-directed HSA, what's different about a regular HSA is the self-directed HSA gives you even more in terms of menu items of what you can invest. Now, with the traditional brokerage or custodial account, whichever company you use, they typically will offer you things like ETFs, stocks, bonds, and so on. I mean, those are pretty typical. But with the self-directed HSA, you could invest in things like private companies. And what I mean by private companies, you could invest in private LLCs. So these are LLCs, corporations. What this means from a practical application is, let's say you know an ice cream store owner down the street and they're looking for some additional investment. Let's say they're looking for $20,000 of investment. Your self-directed HSA can actually invest in that ice cream store, and any profit or proceeds that you generate from that investment can flow back into your HSA as profit and distribution, and now you have growth on that private company LLC investment that you just made. So you have profit, or in this case, distribution from that partnership with the LLC, the ice cream store, that comes back to your HSA that funds for all your medical expenses. Isn't that funny to think about, right? An ice cream store funding all of your medical expenses and prescription. Come on, I mean, that's interesting and funny, right? Ice cream store, health. Anyhow, so you can fund private companies, LLCs, corporations, and so on. We can also get into, and this is my favorite, is you can use your self-directed HSA to get into real estate. Yes, you can use your self-directed HSA to put money down on a rental property, an apartment, Airbnb, put money down, get a mortgage or funding and financing to then ultimately create cash flow, wealth, and you can sell the real estate down the road tax-free, which is awesome, right? I recommend this a lot. So real estate is another one. Crypto, you can get into precious metals if that's your thing. I've even seen people invest in certain collectibles as long as it's allowed by the IRS. So collectibles, I even know individuals that collect certain baseball cards or certain sporting tickets and sell them within their HSA tax-free, which is awesome. And of course, all that pays for their medical expenses, right? Med expenses, right? Emergency rooms, which happens. I mean, life happens, right? Prescription drugs, mental health care, right? All important things. So with the self-directed HSA, it opens up way more things you can invest in as long as it's allowable by the IRS. Now, my two favorite things here, personally, I love being able to invest in private companies and real estate. With private companies in the past, I've used my HSA to fund startups. I've used it to invest in LLCs that also own real estate. There's multiple things you can do. Of course, please consult with your tax attorneys and professionals to really put this together for you in your given scenario. So every year, because I have a family, I contribute $8,300 for at least this year in 2024, whatever the contribution limit is. Each year is a little bit different. But if you put $8,300 invested into your self-directed HSA, that gets removed from your taxable income, saves you money, and then you can use that contribution, $8,300, to invest in private companies, real estate. You can buy businesses with it. It's phenomenal. Phenomenal. And I love this because if you have kids, family, you guys all know that healthcare can be pretty expensive, especially, through different checkups and emergency room visits and so on. So this, my friend, is the next level. If you want to take your HSA and go even bigger or different, I should say, or alternative investments, this is one of the ways to do it. So I hope this video so far is giving you guys some inspirations as to what you can do with your HSA and how you can pay for certain medical bills and expenses tax-free, grow your investments inside of your HSA, especially a self-directed HSA. And I say this over and over again in our video, and that is, I believe finance and wealth to be a one big giant game. And the more you know about the rules and the more you know how to play different strategies and different tactics within the world of growing your wealth, the wealthier you're gonna have and the more options you have. So I hope this gave you some more options and more insights. If you have thoughts, comments, questions, put them down below. We'll love to have conversations with you. If you thought this was valuable, leave us a like, subscribe, because we have a ton more videos like this to expose different strategies, blueprints, things you can use and apply right away, the same strategies that the wealthy are doing for you to also grow wealthy as well. So check out this video right here next, and we'll see you in that video. Take care.